really a trade, just a forward, forward testing. No, there's a back testing and there's a forward testing, right? So in this forward testing, I'm looking at this, I think 15-minute gap here. Price already filled in the upper portion here, and of course the lower portion here, portion here. So I want to see this gap acting as a breakaway gap. So let me highlight it. A yellow, so I know that it's a breakaway gap. So as said during my previous live, not previous live, previous recording, my target for sell side was this low here, and original my buy side was here, but price failed to reach up to there. ES also, and well breaking lower here. So I was sure that this price high resistance here was accumulation for more you can say stops here. So it was accumulating, buying. Someone was buying in this whole price run here, and finally it break the ice and just fall right down here, and it was pretty nice to see how this played out. So I want to see if price really wants to fill up the gap here. So this whole range is a balanced range, and the return here on the wick was the inversion acting as the confirmation of an inversion value gap. This maybe we can pick this value gap here, maybe we can get traded into 30 seconds. Yep. Maybe will be traded. Okay, so I notice here it has already reached into this its equilibrium here. So while I want this to be a fair gap, where I want price to reach into this, let's include the volume balance also. I don't want to see price reach up into the balance price range here, I think. Balance price range here. Yep, price will manage to fill up imbalances here. Yeah, so price reach into a fair gap, acting as a real resistance for higher prices. So you can see that price are really showing the willingness that want to hit lower. So this run right here, you can see where you have a lot of liquidity run and just institutional order entry, order flow entry drill, I think. Let me just write it out real quick. So it's a negative decisional order flow entry drill, where this price return to this was being used by high frequency trading, where they are adding position here to head lower to this Monday first business in the fair gap here. So I don't want to see price making a sharp reversal. This I would like to see it stays, or measuring the gap, you can say. So I will call this the measuring gap. So from the high where it falls to the low of this, I want to use fib retracement, and you can see that how perfectly the third fib hits the Monday first present value gap. So this actually increases is our influence confluences and the likelihood of the price going lower. So I'm gonna put my target right at this position here, as close as I possibly can. And I want to see if price just right lower from this point. One more thing to add on confluences was this 50 was this macro time here from 11:50 to 12:10. For a low resistance weekly run, I don't want to see this price here getting traded back into it, although it can, but if it was a low resistance weekly run, I would not want it to reach into this gap again. Gap price leave a really big big inefficiency on the 5 minute, on the 15 minutes. Price balance the range up here, up until this point, this volume balance here. Also note let's see the order block here, highest point. Actually, I don't really know where's the order block are. So let's go into the 1 minute. You don't have to know everything to understand ICT. You just need to pick one from his arsenal where you can easily master it, easily see it. So you can, I guess, you can quickly become profitable with the with his arsenal that he have. So for me, I choose to use gaps because gaps I can see visually, I can see it like physically, and other blocks are just very, you can say it's very complicated because I'm not sure which one I'm supposed to pick. I know it's the highest one and 3 consecutive candle, but for different time frame, there's actually have you can say conflict to it. So I'll choose gap because every time frame I can see gaps and I can measure it, and I can know on a low time frame that the inefficiency are few or not. So going with 8 mini contracts, I'm trading micro here, paper account of course. I actually want to see how price will gravitate towards this first business value gap here. Also a low on the 15 minutes. So I'm not sure if I want to see price behaving like this here. You know, where I leave out this buy side here. But for many of my experience I have, if price fail to fill up reach into the liquidity or fall short of it, and price are just consolidating close to it, like it did here, just consolidate close to this buy side here, I would expect the price will have a lower run, yeah. So looking on the higher time frame, I see a lot of very chart. I'll just move this first. Looking at higher time frame, it broke as a market such a shift after it broke this high here. Tap just 1 or 2 points above, and just hit lowers, and the they open with a gap down, and while the gap are down, it also broke a swing low here, just a short-term swing low here. So this marked as a market structure shift on the higher time frame. Okay, market structure shift on the higher time frame. So if this price doesn't reach into the liquidity here, I would assume that this is done. They are done. They are done with it. And it's heading lower to attack the sell side. Maybe here. Means that it will go lower. Basically what I'm saying. So let's see here. I'm able to capture the move lower. So it's obvious that price are close to my target. And I know it will hit soon. And I'm just gonna make sure. Oh, and done. You took profit here. So this actually gives me a little information of how the week might turns out. And on my MT5 account, I want to see actually how I want to set up my swing position.